Hey guys, welcome back. Brad here. So today I want to talk about why I invest in stocks instead of real estate. So a number of years back, I read a book called Rich Dad, Poor Dad by Robert Kiyosaki. And in that book, there was a really interesting grid. So there's 4 quadrants, right? On the left side, there's employee and self-employed, okay? On that side, you trade time for money. Now, on the other side, there was big business owner and investor, right? And on the right side of the quadrant, you trade other people's time and other people's money for money. So there's not a direct trading hours for dollars. And it really got me thinking, it's very limiting to only be able to earn based on hours that you work, okay? So it got me very interested in exploring, all right, how can I get over to the right side? And I quickly kind of assessed myself and discovered, I'm not really a big business owner. I don't like managing people. I'm an introvert. I'm very numbers oriented. I'd prefer to just do kind of my solo work in order to earn money on that side of the quadrant. So that brings us into stocks versus real estate. Now, I actually gave it a run at real estate. I paid $12,500 for a program through Robert Kiyosaki. It was like Rich Dad Education, whatever it was. And it was this training of how to be a real estate investor. And, there are all these different modules. There was wholesaling, there was mobile homes, there was multifamily apartment investing, all these different things. And, I gave it a go. For a year, I basically sent postcards to people. I would drive for dollars, which means I would drive around neighborhoods and try to spot houses that looked abandoned or really run down, and then figure out who the owner was and reach out to them. And I got one deal doing this in a year. There was a triplex in Oakland, California, 3 stories. The top was burned out. There was no roof. It had caught on fire at some point. It was just sitting there. There was a fence around the property. And so I was able to track down, now the owner had died. I was able to track down the heir of the owner. I think it was like a niece of the owner. And was able to, get her on the phone. She was interested in selling. I had met someone through Homevestors. So it was this guy who buys houses, right? We buy ugly houses. And I had met him. Actually, he had a sign up in my neighborhood saying, I buy houses. And so I called the number, hoping to find somebody who I could partner with in finding deals. I find the deal, we get a finder's fee, and he would do all the closing and all of that. And so I was able to work out a deal with him where if he closed on it, after I gave him the phone number to this decision maker about the property, he would give me $10,000. So that's what happened. He closed on it, gave me $10,000, and that felt pretty good. But what I realized through a year of driving for dollars, doing wholesaling, is that in order to make that work, most of how to get deals that way is to find people who kind of don't know what their property is worth. Maybe they're in a rough situation. They have an information disadvantage. And it just felt a little predatory, right? It was also a very extroverted activity. There's a lot of calling, knocking on doors. It's very people-oriented, right? It's a great job for a salesperson, a schmoozer, which I am not either of those things. So, after a year kind of sitting with the reality that it didn't really mesh with my values. It felt a little predatory. It really wasn't me in terms of having to be an extrovert and really network with people and call people. And it was just a slog. It went against the grain of who I am. So, I decided stock market investing is a much better fit for me. I would love to just be able to analyze businesses behind a computer, crunch numbers, read annual reports, and not have to talk to people. I'm an engineer by training. I really just want to be able to do it kind of as a solo activity, right? So that's really why I invest in stocks. Now, obviously, real estate, there's so many opportunities to make money in real estate. It's not that it's a worse, opportunity, that there aren't as many opportunities in real estate. There are plenty of opportunities to make just as much money as there is in the stock market. I think they're both fantastic avenues for investing. Really, it was just a better fit for me to do, for me to look at stocks. And I recall that I got into playing a game called Cashflow. Maybe you've heard of it, by Robert Kiyosaki, the same person who wrote Rich Dad, Poor Dad. And I would play it, I think, a couple times a month for a streak of maybe 6 months or so. And it's interesting. So you start in the rat race where every time you pass a certain square, you have to ask for your paycheck from the bank. And, it's not very much. And then once you amass a certain amount of cash flow by acquiring assets, you get to be in the fast track. And that's a much more interesting track to be. You don't actually have to ask for your paycheck anymore. They just give you, every time you pass, the bank is like chasing after you, right? Here's your cash. And it really got me thinking about how do you get out of the rat race, right? So a lot of these cards to get out of the rat race are, there's kind of two classes of cards. One is you're getting stocks. And the ideal is you get the dollar card. And that's where you pay $1 for each share of this company. And, you have a chance later, if you draw the right card, to get $30 or $40 per share for that stock. So that's like, buying the penny stock and having it turn into a big company, right? That's really exciting. But a lot of the cards are also, you're buying this beat up house, right? You're getting it at a really good deal and fixing it up, and now it's cash flowing pretty good rent each month. So there's two kind of classes of ways to get out of the rat race into the fast track, according to this game that Robert Kiyosaki put together. And so I'm not sure where I was going with that, guys, but I invest in stocks because it's a better fit for my personality. And I found this guy, Monish Pabrai, who invests about $1 billion. He manages money for people. And I really resonate with his approach to investing. He has a very concentrated portfolio. I think he only has 3 U.S. holdings right now. I think he's got a couple in India. He invests all around the world, and all we can see are his U.S. holdings because the SEC requires that within the U.S., investors who manage over 100 million have to disclose what they're buying and selling each quarter. But I understand his approach. His goal is to double his money every 3 years, and that's awesome. Like, that's a 26% annual return. And he has a 25-year track record where he's done that, where he's gotten those returns from the approach that he's using. And it's really about just finding companies that are priced at 50 cents today, and they'll be worth $1 in 3 years. Usually that's companies that are pretty beat up. Investors are really concerned about them. It seems like they have a lot of risk. It's very unclear what they're going to be earning 2 or 3 years from now, so there's not a lot of transparency about earnings a little ways out. And so investors confuse risk and uncertainty. There's a lot of uncertainty, but because of that, the price has been beaten down so much that there's actually very little risk. And the risk here being the risk of losing money. When you buy something at a big enough discount from what it's worth, you have very little risk of losing money. So really, I invest in stocks. I found this mentor that I really resonated with. And his process is fairly transparent. I can see what he's buying and selling every quarter. He puts out videos on YouTube. He does guest lectures like 3 times a year at different universities. And he talks about his investment process. He talks about companies that he's bought in the past, what kind of returns he's gotten from them, why he liked them. He talks about how there's like 5 different categories of companies that he looks at in terms of being a good investment. So there's a ton of education. Like, he really feels motivated to give back to the value investing community. So it's just a treasure trove of information about how to invest in stocks. So, if I hadn't found him, I don't know, I may just be investing in index funds right now, which, there's nothing wrong with that, getting 10% annual returns. But because I found him, I've got the courage to aim quite a bit higher and try to double my money every 3 years. So yeah, that's it, guys. Why I invest in stocks. I'm curious to hear from you. Why have you chosen to invest in stocks? Or if you invest in real estate, why have you gone that route? I'd love to hear from you. Hit that subscribe button to see more of these videos. I'm putting one out every day. And then I'd really appreciate a thumbs up if you like this video. If you didn't, give me a thumbs down. What the hell? And leave a comment telling me why you weren't quite feeling it in this video. All right, guys, that's all I got for today. Have a great day, and I'll see you in the next video. Bye-bye.